Why philanthropy hampers innovation. When Anmi Chang moved from working as a senior executive at Google to the social innovation world, she quickly discovered that social innovation, the development of better solutions to social and environmental challenges, is much harder than tech innovation. And this post will summarize from her book, Lean Impact, the reasons why mainstream grant and donor funding models, mainstream philanthropy for social impact projects, leads to, at best, incremental change, and why this traditional funding model actually hampers the ability to develop solutions which are suitable for large-scale impact. And this post builds upon the previous posts also from this book that I have. Let's first talk about the traditional grant-based funding and how it works. Well, first, a funding organization outlines the amount of funding they will probably give to a particular problem and the associated criteria on how that money can be used. Organizations then can apply for the funding and develop plans based around the amount of funding offered. And these proposed plans have to suggest really a safe and incremental advancement based on past results. Anything too radical is probably going to be rejected. And then a detailed master work plan must be created. And typically this is performed in offices overseas from where the actual grant will be carried out. And this outlines exactly the work that will be carried out throughout the grant's life. Now, if an organization is successful in being awarded a grant, their job is to execute it, not to modify it and not to seek better ways to do the same work. The grant typically ends with the organization reporting their fundings to the donor. And if they're successful, meaning that they executed the grant as set out, it might be able to allow them to apply for a second grant or an extension, or the project just might end. This approach can be summarized as rigid, one-off, and doesn't guarantee that the work being done is the best work possible. As Anmi says, quote, just as companies have the ability to maximize shareholder value, mission-driven organizations have an obligation to maximize their social benefit to society. I'd like to contrast now this traditional philanthropic model with how venture capital funding works. So in venture capital in Silicon Valley, stereotypically, you would have a traditional startup and they're encouraged to think about a problem not in terms of their immediate resources available, but to think of the problem ambitiously and to develop a solution that would deliver the greatest value at scale. And the startup knows that the first solutions that they propose on how to get to scale will probably not be the optimal solution in the end. And so they know they're going to have to probably modify their ideas. And so the whole purpose of the startup then is to run a series of mini hypothesis-driven experiments to find product market fit. And this magic solution is found when the startup identifies something of value and a way to achieve exponential growth in its delivery. Now, startups will go on to seek seed funding from angel investors, and angel investors invest in ideas that have enormous potential, but are unclear if they work or not. And the investors know that most of the projects they invest in will fail. As startups demonstrate valuable learning about their ability to achieve product market fit, they progressively are able to raise sequential rounds of funding, and each round enables them to continue this process of value and growth hypothesis discovery. You might be wondering, why does venture capital tolerate funding so many failed startups? Shouldn't they just pick the one they know will succeed? Well, the problem is that the best startups are all run by brilliant and passionate founders. All the startups believe that they're sitting on the next big idea. Each idea seems fantastic if true. And so the angel investor really knows that when they invest in startups, they don't know which one is going to take off. And so that's why they often will invest, in 10 and 9 are going to fail. But they hope that within that basket, one of them will have massive success. One of them will understand and crack that value and growth hypothesis and then go on to become what's called the unicorn, or, the billion-dollar company. And it will be able to, through its profits, offset all the losses from the failed startups they invested in. Now, you also might be wondering, why don't venture capital funders fund startups solely based upon their ideas? And as we've been discussing, often the initial idea which is pitched isn't the final idea which is successful. And so investors know that they need to make their funding decision based on a combination of the team and the idea, because they need to be confident that that founding team will recognize when the original idea isn't working and then pivot to something better before the money runs out. Let's return now to philanthropic funding or grant-based funding models and try to understand why traditional social impact funding or philanthropic funding hampers innovation. So NME identifies two main issues with the traditional model. The first is a fixation on guaranteed outcome, and the second is a reliance on waterfall methodology and the inflexibility that these two scenarios creates. When funding for a guaranteed outcome, as traditionally is done, organizations are essentially asked to take a fixed amount of money and to spend it. And the solution, therefore, that is proposed has to be conservative by nature, and it needs to have really short-term thinking prioritized rather than long-term scalable thinking. And this model really, therefore, rewards short, small, linear steps, which is why, and me would say, we have not made larger exponential steps within social impact sectors. And as we also saw in the previous example, venture capital invests not in safe small businesses. That's not what their role is. They see their role as to fund unproven ideas with the potential for enormous success. And so this model of searching for guaranteed outcome from traditional donors and grants means that at best, progress will be, quote, slow, plodding, and linear, end quote. And so this is why NME thinks that social impact organizations haven't had the potential to address a sizable percentage of the people that are affected by the issue. We now move on to the second problem, waterfall development. Waterfall development is a traditional work cycle where you have very clear subsequent steps that execute in sequence. And a typical grant may be over several years, and it wants each of the steps to be sequentially outlined. But the problem with this, as you've probably discovered, and me would suggest, is that it really hampers the dynamic, hypothesis-driven testing of assumptions that is required to deliver the highest value and the highest impact. And so rigid grant outlines developed upon many assumptions that are not validated and are not flexible enough to uncover the truth of what really works. And so at best, in general, the questions of value, impact, and growth remain untested. One of the other concerns that NME has, and this is coming from someone who worked with a major U.S. donor organization from the government, USAID, and she was the chief innovation officer there. Her critique is that the traditional donor-recipient model can create a toxic relationship, and that the grant recipient really wants to always present to their funder that the work that is being funded is working exceptionally well. And this can therefore lead over to a glossing over of problems with the grant as it's being delivered. Instead, what NME suggests is that the new model is really one of shared learning, where both the donor and the grant recipient together want to discover what really works. And they will be transparent with each other in showing how different hypotheses have been tested and what their relative success is. And so NME sees this relationship between donors and organizations shifting away from, quote, micromanagement and suspicion towards each other towards one where donors establish clear goals, let go of control, and select teams and organizations to empower as true partners. And this means then that nonprofits and social entrepreneurs in turn will need to accept more risk, become responsible for results, and develop skills and results to accelerate learning rather than executing a plan. And the last of the critiques here I'll bring up from NME is one related to overhead. Often in the nonprofit world, the amount an organization spends on overhead is really a focus of donors and public critique. But instead, NME says, well, what you really should care about is the measurable impact that an organization is having. Overhead is sometimes required to drive innovation and research and development. High overhead or low overhead does not mean that a social impact organization is good or bad. The organization, as I said, needs to be judged based on its impact metrics. For instance, an organization with low overhead might appear appealing and successful, but if it's having low impact, it's not an effective organization. And so let's conclude and wrap up here. NME proposes that the traditional rigid grant process makes it nearly impossible to innovate in social impact. And this process ties the hands of social entrepreneurs behind their back in being able to find truly innovative solutions. She advocates instead, therefore, for tiered funding, where you invest in ideas with ambitious potential but unproven success, and you ramp up further funding by funding the best projects forward. Funds are then freely allocated when they're given to an organization to be dynamically used as they see fit, and the focus should be on the impact and the outcome, not how much of the funds go to different types of funding streams. The third thing is high transparency, which will enable the organization to test and fail and to share these findings with the funding organization, who is ultimately helping fund high-risk ideas to understand which ones work best. Ultimately, she proposes that a blended funding model will be needed where philanthropic dollars are used to fund these risky innovations, but this will then unlock private capital and government funding later, which can be used to accelerate the successful ideas up to scale. Payment should be for outcomes and outcome-based incentives to help drive continuous innovation, and donor collaboration mechanisms, such as a centralized funding pool for high-impact areas, might be helpful. The focus of funding really is to encourage the continuous exploration of those ideas with the highest value, growth, strategy, and impact. An organization cannot believe that their existing approach is optimal. An organization cannot say, well, this is what the grant we wrote 3 years ago says, this therefore is the best thing we can be doing with this funding. NME believes organizations must continuously demonstrate that they are trying to do better, to have greater impact with every dollar, and just as a for-profit business must continually innovate and improve, so must the nonprofit. So this is a shift in thinking both for donors who are used to project-based funding to encourage them instead to seek solution-based funding.